Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Jessica Inskip, Director of Investor Research, stockbrokers.com. It is great to see both of you. Jessica, whenever you're with us, we'd like to get your big picture take on what you're seeing in the market. What are you paying attention to in terms of patterns?
Yeah, absolutely. We are still seeing some upward momentum from a technical perspective. There's actually a lot of triggering showing that there is additional upward momentum across all of the indices, inclusive of the equal weight. But my main concern is we're coming to that ceiling of uncertainty that we spoke of. We've gotten some certainty in the terms of tariffs, but we also need more certainty around fiscal policy, around debt ceiling, around even monetary policy. So really the upside risk is in yield increasing, and I'm watching 4.8. I don't want to see anything above that on 10-year yield specifically, because I think that could dampen any upwards momentum that we have. And it's just really hard to get to new highs with yields increasing like it is.
Okay, all right. Let's talk about the first ticker on your list, BLK, Blackrock. You're looking at that one a little bit higher today, a little bit underneath the performance of the S&P 500 year to date. What's your views here?
So this is doing with the hearing that is happening right now with Paula Atkins, our new SEC chair. He is very on the road for pioneering tokenization and innovation, technology, and blockchain specifically. We've talked about BlackRock before. They're leading the future of digital investing. There's also this buying the dip mentality that's helping with that overall macroeconomic picture that's bolstering up the markets. So BlackRock benefits from this retail integration. They really benefit from what the SEC new chairman Paul Atkin is saying, and that to me is going to be just new changes. Even today, I like to watch the tiny things. He wore a purple tie, like our favorite Powell chairman does as well, to just indicate bipartisan. And if bipartisan, in my personal view, that's going to have more stickiness. It's going to stay longer. And so I really want to position myself while benefit for companies that are on that forefront of testing tokenization like BlackRock is.
Okay, all right. Rick, you're up. Take us through what you're paying attention to when it comes to the chart for BlackRock.
A big resurgence off the tariff news lows that seems to be, for at least the most part, holding above a noteworthy level. The highs that we established during our decline off of our 52-week highs here, 980 was a level to watch. That's about where we broke above and then held support, and now it seems like price is continuing to migrate upward here. However, you could draw a trend line starting with these lows here. It looks like for now that has been broken here. It could be a source of resistance to continue to watch going forward here. We can see that RSI has broken above our 50 midline. In the past here, we're hanging on to our green trend line. Now we're approaching the overbought area, the threshold of 70. That would be another bullish signal generated here. So the next potential stop then for many traders likely would be the high point after we had our gap down around 1056 or so. That could be another upside area to keep in mind. Our moving averages, though, our two shorter term, yellow 21-day and orange 63-day exponential moving averages are clustered together near about 945. That could be a downside point to consider if things do start to move in that direction here. Point of control for volume profile just above that same area near 954. Volume picks up once again in this area near about 1030 or so.
Okay, all right. Jessica, any final thoughts on BlackRock before we move on to your next trade?
Yeah, long-term positioning, just understanding some fiscal tailwinds that we may have.
Okay, all right, so long-term positioning there. Let's talk about your next trade, L3 Harris. It has been outperforming the S&P 500 year to date. What are your views here?
So this one popped up, Diane, from a weekly technical scan. My technical scan, I look again at a longer term view, usually 3 to 5 charts in weekly intervals. And I look at crossover for the 13 and 26 weekly moving averages, because 13 represents 1 quarter worth of prices, 26 is 2 quarters. I want to see prices increasing in that near term quarter. And it's a good indication to me of bottoming in the way that I utilize my scans. That's, of course, is our first signal. And then we address from there. So it starts with technical momentum. What's interesting is there was a lot of defense and industrial that showed up on the scan this week. L3 Harris specifically, it looks like it's positioned for future Department of Defense needs. There's exposure across multiple segments. There's advanced communications and it's security technology. It looks like they're also a global defense leader because they have defense and electronics and communications. And specifically, what's called out from a lot of the reports that I was reading is golden dome positioning. If they're positioned to have those type of strategic partnerships that would help them get those type of contracts, then perhaps they're going to benefit and that will translate right over into earnings.
All right. All right, Rick, what do you see when it comes to the technicals for L3 Harris?
One price level stood out right away, the 223 level, this green line here. So we had a low point, price broke through to the downside here, and then that was our ceiling for much of the past 6 months or so. We did form a double bottom type pattern right around 195 here. Actually, we made a slightly higher low than the first time, so that was a bit more encouraging for the bullish crowd here. But we have our moving averages clustered together very closely. This speaks to lack of directionality, of trendlessness in this case here, where price has just been moving in a range-bound area. But now we are holding on above that 223 level. Our yellow short-term 21-day exponential moving average is crossing above its slower counterparts as well. So look for them to continue to diverge. Look for the orange 63-day EMA to cross above the purple 252-day EMA for another sign of trend improvement here. But RSI also hanging on in the overbought area, the threshold of 70, moving above that level in a trending market, typically regarded as a sign of strength. So if we were to consider our volume profile study, our green line does match up with a volume node near 223. Price is holding on near 230, just above our +1 standard deviation channel here. Another small node comes into play there. But if we were to move higher, the next volume node comes in near 247. And just quickly to illustrate what Jessica was saying, we can see that we have here our 13 and 26 weekly moving averages cross with the faster crossing above the slower. You can see our volume nodes kind of stand out even on this longer term basis as well.
All right. Let's look at the chart for L3 Harris. Jessica, let's talk about your final trade on your list. You've got GS on your radar. What is it about Goldman? What's your view here?
Absolutely. This is as well fiscal implications that are tied to it. It seems like fiscal implications having a bigger impact on the macro and translating it over to the micro. This is positioned what I feel like for a deal-driven comeback, perhaps in the second half of this year, as we're getting into that now. If we see an uptick in deal activity, if there's major corporate spending plans that we're seeing on the table, there is lots of indication that there is additional spending, and Goldman Sachs is set to benefit from any type of recovery within the second half. Additionally, if there are fiscal headwinds that come in that dampen that or geopolitical tensions, there's still strong trading performance from Goldman's end that could offset that. So their global banking and market division actually grew 10% year over year based on their last earnings report, and that was driven by exceptional equity trading results. So that really goes back into this increase in trading that we're seeing, increase in volatility, different market mechanics, and of course, a key risk for Goldman Sachs specifically is if we do see a broader sell-off in the S&P 500 due to that macro uncertainty. But again, that ceiling of uncertainty, I'm going to keep saying that to you, Diane, is on the market. Once we have clarity, that really opens up the door for broader implications.
That's a great point. Look, we bought us some time with that 90-day pause between the U.S. and China. So it certainly loosens things when you think about those in the financial space. So, Rick, take us through what you're paying attention to when it comes to the chart for Goldman.
When we look at this one, there are a couple horizontal levels that make sense to keep an eye on here. First, we have our red line here that represents a couple of low points that we saw near 625. Then that was the resistance area where we formed a couple of high points. Notice we did not quite make it there yet during our current rally, despite our nice gap to the upside. The old high point right here, 592, is about where price closed after our gap up. So far, we've held on to that supportive area, so this could be another downside area to watch near 593. But our moving averages are improving. The faster are migrating above the slower. We can also see, however, RSI is taking a bit of a breather here. We are potentially slipping below our green trend line, and we have also lost the overbought area. Doesn't mean it can't come back. It could be just a short-term false move here, but look for that convincing push for price above that 625 level for things to further solidify for the bulls. So if we were to look here, our green line once again, that represents a high point and then a low point that we saw after our gap up in terms of the close. Pretty close there. That's also our volume node here, near about 595 or so. So another extra level of weight given to this particular level. And we can also see volume starts to pick up once again once we were to get above 625. So an important threshold to clear as well.
All right, Jessica, I'm going to send the floor back to you. Any final thoughts on Goldman is outperforming the S&P 500 year to date, or any of your other picks on your list?
Yeah, I just think the broader macro view, it's so important to pay attention to the 10-year yield right now, watching that level of 4.8, because that just has broader implications, even with valuation models, as we call it, the risk-free rate. So pay attention to that, and that translates into the micro as well.
All right. Thank you, Jessica. That's Jessica Inskip, Director of Research, Stockbrokers.com, and our very own Rick Ducat, who, as you know, I like to call the Duke of Data himself. Thank you both.